Hello and welcome. This is the Unemployed Value Degen. I am not giving financial advice, and I am joined by one of my former students, Mitch. How are you doing today, Mitch?
I'm doing good, Coach. Thanks for having me.
Oh, it's always a pleasure, and thank you for coming. I know your schedule is tight, but this was an important time to meet because for the first time in a long time, I'm going to have a little more cash to deploy, and it's time to look at the market and see, just as with that marginal dollar coming in, where to deploy it. But before I do that, just jump into how we start every episode, and that is just seeing what's going on in the market overall. And the 10-year Treasury has finally given up some of that peak, and it might be on the downswing. And isn't that fantastic?
It does sure look like it's coming down a bit from its peak.
Yeah. Now that could be a fake out, but oh, go ahead.
No, yeah, I agree. And if you open up the weekly chart, it does show a pretty good pullback from, I guess, last week. But yeah, it's come down significant bit from, it touched 4.8. So some nice reprieve for stocks.
Yeah, people were pretty scared when the 10-year broke the prior peak. So when the 10-year went over this 4.7 mark, that put some fear in the market. And I think if it had broken this previous 2023 peak at 4.9, that would have put a lot of fear in the market. But if we're in this descending channel with a chance to get to maybe 3.5% on the 10-year Treasury sometime in 2026, then I think we're in for a pretty long sustained bull market. And then previously I had been drawing the channel on the old peak, and that channel failed. But we'll have to see. I have a suspicion a lot of the recent run-up was not due to fundamentals, but due to Treasury shorts trying to press their advantage. And Stanley Druckenmiller even came out and said that the Treasury short was in its 7th inning. So he was predicting that maybe this is a fake out and the 10-year Treasury rallies a little bit more. But for the most part, this Treasury short rally is getting close to the end, according to Stanley Druckenmiller. And what does he know anyway?
Yeah, it does look like it could keep bouncing, but who knows how it's going to react in the short term.
Yeah.
But I think it's interesting to look at with the fear and greed index. So last time we looked at that, it was in fear, and the week before it had been in extreme fear. And kind of as we predicted, in our video, where we're talking about how we're bullish, when the market's in extreme fear, it tends to come back to the median of neutral, right?
Yeah.
So
and historically, it's a very good time to just pull out some money and buy something. Now the opposite isn't true. So if you're in extreme greed, it's not necessarily the time to sell something. Extreme greed can just keep on going and become extremer greedier. But extreme fear is a very good signal that it's time to buy something. And we were there 2 weeks ago. And and we'll look at some of the charts in a moment, but probably we have at least a couple more weeks of this rally before anything gets in the market's way. I think we have Jerome Powell speaking soon, and where the last meeting he spooked the market to the downside, and nobody's expecting a rate cut. I think the odds are pretty good that so there was some recent data out about forward-looking rents and forward-looking rents collapsing, and rents are one of the larger contributors to CPI. So there's a chance that we could have CPI come in light sometime in 2025. And I think right now the market's pricing in 2 cuts in 2025. But there's a minority opinion out there that with the falling forward rents, there might even still be 3 or 4 cuts on the table. So if the market starts to price that in, this rally could go on a ways.
Yeah, I agree. From what I've seen, the market seems to be pricing in 225 BIP cuts. And I think, not cutting in the next Fed meeting would probably be a good thing.
Yeah.
We don't want inflation to start heating up too soon before we get farther enough in this this rate cycle, especially with the 10-year being just coming out off of that high.
Yeah, some time to digest things and some time to see what Trump accomplishes. And then sometimes I like to go in
uncertainty around what Trump is going to bring for the economy.
Yeah, there's going to be a lot of volatility, but I like to go into the components of the fear and greed index, and the market momentum is back up. The price strength, though, so after this 2-week rally that we've had, there's still more stocks on their 52-week lows than on their 52-week highs. So there's not a lot of new highs on individual stocks out there. Breadth is still bad, but getting better. But nobody's buying puts. I mean, it's just everybody's buying calls and nobody's buying puts. And then the VIX is somewhat subdued. So it's an interesting time, right? So people
there's too much potential for the economy to boom to really make sense of buying puts right now. Yeah.
So it's kind of one of those, you don't need to be a contrarian just for the sake of being a contrarian. If everybody's buying calls, sometimes everybody's wrong and sometimes everybody's right. And we are in a industrial revolution. We are in a bull market, and we are bouncing off of the extreme fear. And then one other thing that happened recently was the dollar index finally cracked. And so that was pretty refreshing. Let me go ahead and I had made this previous channel. Well, I had made this lower in the past.
Yeah, I think you had that top of the channel a little lower.
Yeah, so this had broken out of my flat channel that I had drawn. And again, some of this could have been some unsustainable Treasury shorts pushing things outside of trend. With this recent, and there's been some crazy moves. Suddenly everybody is taking money and rushing into Europe. But nobody's really bullish Europe. So then there's the rumors, well, maybe this is just automatic rebalancing. If these model portfolios have 10% exposure to Europe, that's down to 8%, then they have to buy a lot of Europe. But the dollar's weakening just a bit, and Brazil really bounced hard off of its lows. I think there was just a lot of drama going on in the world, and Lula hasn't done anything crazy in a while. So that's where we are. The Treasury started giving back some of this rally. The dollar started giving back some of this rally. And we are 2 weeks after bouncing off of extreme fear on the fear and greed index. And one last thing, just for the Schadenfreude. For the last 1 month, small value has outperformed large growth. Right, so it's like finding a unicorn.
I'd love to see that.
Yeah, as a value degenerate, small cap value degenerate, this is a rare thing to see. A month where small value and small generally outperforming large. So sometimes what happens in January sets the theme for the year. Sometimes, so the commodity trading algorithms, the CTAs, and just all the momentum chasers, sometimes they make January look like the rest of the year just by chasing it and pushing it forward. And especially where the Russell 2000 is projected to have, I think, 19% earnings growth this year, and the S&P 493 is only supposed to have 13% of earnings growth this year. So this could be that 1 year out of 20 where small caps outperform if this January pattern is just pushed forward by the momentum chasers.
I completely agree. I was about to reference that same 1 in 20 years outperformance that, hopefully, we start to see that with, the new political, regime. I think it'll definitely be favorable for small caps. Yeah. And if rates keep getting cut, that'll help financing costs.
Yeah, so refinancing risks coming down. Small caps tend to have less international exposure, so that some of these strange currency fluctuations won't hurt them as much. I mean, if you're Apple and you're selling smartphones, not smelling smartphones, but if you're selling smartphones in countries where their currency is depreciating rapidly, and then you try and repatriate that currency back to the U.S., that hurts you. But if you operate exclusively in the U.S., then the strong dollar just makes your raw materials cheaper. So with falling interest rates and a strong dollar, that could be that 1 year out of 20 where a value outperforms, or a small cap value outperforms. And what's so important about that is when small cap value outperforms, it doesn't outperform by a little bit, right? Because it has 20 years of underperforming. When small caps outperform, they outperform by, by doubling or tripling in a year. So this is really something to watch out for. If it happens, not a prediction, but wouldn't it be nice? And then that brings us to some of the major indices. So the S&P 500 finally broke out into a new all-time high from its November-December peak. But nothing else has. So the equal weighted is still a good stretch below its peak. So I mean, we still have another 2 weeks of a rally just like this, just to get the equal weighted S&P 500 back to its old peak. And it's even worse in small cap land, right? Small cap maybe needs 3 more weeks of a rally like we just had to get back to its all-time highs. This one not being able to break above the 50-day might be a little troubling. I don't know how you feel about that.
Yeah, so especially with this chart, I think it's behaving very well, right? You see how it just sharply bounced off the 200-day on that drop, and of the 3 charts, none of them fell below their 200, right? So that's a pretty bullish sign, I would say. But the downside is that all of these charts are at the top of their Bollinger Bands, right? So there could be, maybe another week of, consolidation around this top if it's going to continue. But especially the SPY chart that you had, it looks like that broke a pretty significant top. Yeah. So S&P could be off to the races. Who knows?
Yeah.
Breaking above the 50-day is always bullish. So this looks pretty good to me. I mean, I think there could be, a little consolidation before the rally continues, but then again, it just broke through the top. So it'll be an interesting week or two to see how the market reacts.
Well, I think Jerome Powell speaking next week? Not to put you on the spot, I could be wrong, but sometimes if Jerome Powell speaks on Wednesday, a lot of times the market's down on Monday and Tuesday, just clenching and waiting for Jerome Powell to speak. So we could give some back. That wouldn't surprise me.
Yeah, I believe he does speak this week.
And then this is that value factor, and the value factor looks a lot like the Russell, where it's hitting this 50-day, and that it could bounce back, it could give some resistance, it could fall a little, but on the longer term, it's still a bull market, and we're still pretty far below the November highs. So there's a lot of rallying left to go, just to get back to what we used to have.
Yeah, like if next week, over the course of the week, it just kind of maintains at this 50-day level, all of these charts really, then I definitely could see a sustained rally coming.
And last week I had mentioned the possibility that maybe this was looking a little bit like a bear flag. With this, recent last week's rally, is it looking a lot less like a bear flag?
A lot less, yes, because it broke out above that lower low, right? If it continued to make lower lows, then it definitely would have indicated some more downside.
Yeah, so that wasn't too encouraging, but that's more encouraging.
Yep.
All right. Well, let's jump into some individual names. So again, the purpose of today's call is to try and figure out, with a little bit of money coming into the account, what to spend it on. And at the top of your list was Portillo's.
Yeah, this is a great looking chart in my opinion. Earlier in the week, I called it out to you that it was breaking out of this range that it built up. I keep on talking about, you want to see a little bit of consolidation once it's moved above its averages, so that you can confirm that it's not just testing the point and then retracing back lower. And this looks like it's significantly broken out of this range.
Yeah.
And if it stays above the 50-day and the 200 for long enough, the moving averages could have a bullish convergence.
Yeah. So it could set itself up for a golden cross when the 50-day crosses the 200. One of the things I like about this chart is Friday was a red day for the markets, and most Fridays are red because people sell to leave for geopolitical risk. They want to stay out of the market for the weekends. But when you have a major index red for the day and the individual stock is green, that's a pretty good signal that there is some conscientious buying. It's not just indexes moving things. It's not just the averages and the ETFs. People are accumulating this name.
Especially considering it was flat for pretty much the entire day Friday until the last hour of trading.
Yeah,
it had that huge rally.
Yeah,
so that's a pretty good indicator to me.
Yeah, somebody with money has a very strong opinion about this stock and is accumulating aggressively. And
now, the one thing that does concern me is the RSI is getting hot.
Yeah, and the MACD is
it's starting to lose a little bit of steam. So something to watch out for sure. But it does look like it's broken out of definitely broken out of the downtrend and then breaking out of this consolidation trend around 12.
Okay, so you'd be confident spending money on this name on Monday at the open?
If it opens down, then definitely. You know, the RSI being a little hot is just concerning me, and if it rallies too much, there's always risk of it breaking below. So, I would put a mid-level of confidence. I don't think this is going to end up being my top marginal pick, but I do like the chart.
Okay, so I won't put this as like a dark green. I'll put this as kind of a lighter shade of green. There's that. It's a buy, but it's not a super crazy strong buy. Let's take a look at applied optoelectronics. This is my only AI data center build out name.
Yeah, this was also on my list. I think this is providing a good opportunity to buy that we haven't had in a little while. And talking about well-behaved charts, it hit the bottom of its Bollinger Band on that pullback, and now it's trading a little bit below the 50-day. I mean, I would have liked to see it not reject the 50-day. You see that one candlestick
see that.
went above. So that might not be the best sign, but it definitely could retest it. And fundamentally, I think it's just it's so strongly positioned. So I think it definitely can make another run back to highs.
I went to the 3 months just so people at home could see what we're talking about a little closer. It's this day here. That would have been Tuesday. So on Tuesday, it broke above the 50-day right there, and then it was rejected. So it ended the day below the 50-day. That's not
It looks like the next day, it briefly touched above and rejected.
Yeah, so that's 2 days in a row of being rejected at the 50-day. That's a little concerning, but the longer picture is that this is a bull flag. Let's draw this one. So you got this huge rally, and then you've got this consolidation period, and that makes a bull flag chart. So there's going to be some consolidation period, and then after that it should be off to the races again. So that's the longer picture is that, and the shorter picture is that getting rejected by the 50-day moving average is a little troubling.
Yeah, it is, but I still would feel pretty confident buying it here, especially based off the bottom at 28 being so strong. And if you notice when it rallied back in November, that's where it built some consolidation as well. So that makes me feel pretty confident that 28's a bottom.
Okay, so this is that part of the technical analysis where past resistance becomes support. So
you took the words out of my mouth.
Yeah, the longer it spent consolidating in November at this $28 mark, when it comes crashing back down and hits that $28 mark, that becomes the new floor that it bounced off of.
Yeah, so I would feel confident in buying this one, more so even than Portillo.
Okay, so we'll make this a stronger green color and move that above Portillo's. And then one that was on both of our lists was ARS Therapeutics, the epinephrine nasal spray.
Yeah. In our last video, I think we called this one out as a strong buy candidate around maybe $12 when it was bouncing, holding above the 200, and yeah, it's just continued to move upwards. Now this is looking a bit overbought. RSI at 71, top of its Bollinger Band. So maybe look for it to take a little, bounce on the 50-day, but it's a matter of $1.50. It's not the end of the world, but just overall, the company is pretty much as safe of a biotech play as you can get, and it was getting thrown out with the bathwater with all the other biotech and healthcare stocks unnecessarily.
Yeah.
So I definitely like this one still.
I think RFK's confirmation hearing is next week as well. And I hope he gets confirmed, but I have to imagine that if he gets voted down in the Senate, that the entire medical biotech complex, all the stocks will just rally through the roof.
Yeah, I wouldn't bet on that happening, though.
Yeah, well, it's funny. I think pharma lobbyists are pretty powerful. And we just had with the Secretary of Defense, J.D. Vance had to cast the tie-breaking vote because Mitch McConnell voted against him. So there's a lot of drama going on with Trump's appointees, and Democrats are pretty monolithic, right? So you've got Susan Collins in Maine and Lisa Murkowski in Alaska, who are willing to defect from the Republicans at the drop of a hat. But the Democrats make this very strong monolithic, and they stand together much more consistently than the Republicans do. So it's I don't know. Pharma lobbyists, could they find 3 Republican senators to vote no on Robert Kennedy Jr.? Anyway, that's not my base case, and I hope he wins because I do like him. I think that whole part of the government needs to serious reflection. If I'm looking at this, should I try and hold out and wait to buy it for $13 instead of $14?
So let me tell you what concerns me. If you go a little bit closer, a shorter chart, the same way that when we saw the 10-day in a row of red for value, this looks like it's had about the same 10 days in a row going up, right? Yeah. So at some point, there's going to be at least a little bit of profit taking, right? So I would like it a lot better at $13 if it can, hold that range right on top of the 50 and then buy in, hopefully it continues the rally. But this move upwards from 11 has, just been pretty quick, right? Yeah. So you always got to at least be aware of the potential that something could, return to equilibrium a little bit.
Yeah, and what concerns me is it was one of my top picks. So if I like it, the timing is usually terrible. Okay, so should I put this in relation to Portillo's?
I would rank it in line with Portillo. Yeah.
Okay, so that'll get our kind of pale light green. And then a new name. This is, I think, my paywalled write-up from Friday, Abacus Life. And I'm not going to talk about it because, is it not? Okay. I won't talk about the thesis because that's behind the paywall. But just from a chart perspective, this is what the last year has looked like for Abacus Life.
Yeah, I think we're starting to see a breakout from the bottom, right? It's back to this range where it was consolidating at 775. The fact that it moved and held above the 50-day in the last trading session could be indicating the start of a breakout, right? Especially if it moves past the top of this range at around, a little over 8. This thing could definitely, in the short term, go back to 9.5 where the 200 is. That would be my short term technical price target. But and you see it's consolidated a lot in that range 950 to 11, you could call it. So that would be maybe where I'd look to, unload a few shares or, play the volatility, it might go back to that range, but it looks like it's trying to break out of this range that it's in here.
Okay, so this
And
is
it got too oversold on the RSI on that last dip down to 7, and it's just moving strongly upwards since.
so I'm not usually lucky enough to find something at the absolute bottom and at the inflection point, but just by sheer dumb luck, I might have found this thing right as it just finally stopped having these lower lows. Right, so it just appears to have stopped having these lower lows, and it's trying to break out and form an uptrend. And you're saying if it breaks above some of these past resistance lines, if it breaks above, maybe call it $8, there's nothing standing in the way of it getting back to 10 where it consolidated before for a long time, and you'd have a pretty good rally there.
But talking about fear of something, rejecting the 50-day moving average. This just tested it for the first time since back in October, it looks like. So I would want a little bit of confirmation, let it sit above the 50-day, but if it breaks out of this range, it might be off to the races. Technical analysis would consider it a breakout above 820, and it could very quickly fill that gap.
Okay, so this is a potential inflection point, but sometimes it inflects downwards and sometimes it inflects upwards.
Yeah, this is a high risk entry, but high reward.
Yeah, so that there's not confirmation of the breakout. There's just like the prairie dog's head is just sticking out of the hole for the first time.
It's teasing a breakout, but if it can hold above, and if the next candlestick is even further above, like if it opens on Monday up a couple percent, that would be a pretty good sign.
Well, I really like the fundamentals of this company, but it's not cheap. It's not a value stock, and I like quality stocks, but they have a lot more multiples to compress than a value stock typically does. But I started a position anyway because it it fell in with my theme of Jackson Financial and Finance of America companies. It was right up my alley. I started a position, but I still have plenty of room to buy more. But how would you rate this compared
sometimes,
to?
these value I would give it the same strong buy rating.
So you'd put it up with Applied Opto. That this is maybe a little bit of a gamble, but a strong buy.
Yeah.
Okay. Interesting.
It's definitely for the degenerates.
yeah. Hey, I'm happy that I put Degen in the name because if somebody loses money on one of my stock picks, I can always fall back on you're listening to somebody who has degenerate in their name, so there's a little bit of mutual culpability in there.
Yeah. So this is one that's been on my radar for a while. I even bought a little bit of shares pretty recently, and it's been breaking out of this bull flag very strongly. So it rejected once on the 50-day, but then it gapped way up, from 70. Now it's coming down a little bit from 92, which honestly is probably best case scenario because it was getting hot on the RSI. But I think this is definitely looking like a breakout, and just seeing the way this thing ran from 35 to 110, right? It seemed like this is preparing for another rally, ever since it started consolidating off that top, and it looks like that rally is starting.
Yeah, so this is the bull flag pattern, right, where it has a strong run up, it spends some time consolidating, and then it breaks out of that bull flag, call it there. So it could be off to the races, but as far as the next day or two goes, it bounced off the RSI, but the MACD is not quite yet rolling over. But so who knows? The next day or two, who knows? But the fundamental story, I mean, you just have to you check the financial news. It's almost every day you see somebody talking about artificial intelligence requires nuclear energy, and we don't have enough, and we need more. And that's just a constant. Artificial intelligence requires nuclear energy. You can't even skim through any of the financial news websites without hitting across that story pretty much every day. And
Yeah, considering they're the only company domestically that enriches,
yeah,
they don't have much standing in the way.
yeah. I mean, there are a couple of startups that are promising, but this is the one that this is a former Department of Defense company that was spun off into a private company. So the Department of Defense is really accustomed to working with them, and they won 3 government Department of Energy contracts to rebuild domestic enriching. And the purpose of those contracts were really to rebuild domestic capacity. Now, there were 5 or 6 other companies that also got awarded the bare minimum, but the purpose of those this gets into, and this isn't in my paywalled write-up, but it's so old now, because I did the paywalled write-up down here in the $40 range. Nuclear non-proliferation treaties have a requirement that the U.S. military can only buy their uranium from a purely American company with a purely American technology. So even though the French are enriching uranium, I think they have a facility in Arizona somewhere, and the Canadians are enriching uranium, that's a foreign company, right? That's not American. So this is the only purely American company that enriches uranium, which means all of our Navy that has these small modular nuclear reactors they run off of, all of that fuel that's purchased for them, and then also the future uses for whatever rockets that the I think this even is going to cover SpaceX tangentially. I don't know. They're somehow tied in with the U.S. government. People were asking Elon Musk one time, well, if they're not letting you launch more rockets in Los Angeles because the Coastal Commission is stopping you, why can't you go to Mexico? And he was like, no, we can't do that. We have to stay in America because there's a Department of Defense connection there. So when we're talking about having spacecraft with nuclear reactors on them, this right now currently is the only company in the running to be able to enrich that uranium. And that's projected to be, I think by 2030 or 2035, $1 billion of revenue a year, just to serve the U.S. government alone. And then on top of that, they can serve the entire nuclear reactor civil electricity fleet, and then all the small modular reactors that Silicon Valley wants to build for the AI data centers. So I think
the fundamentals are a good setup. And to your point, the government contracts, the market likes that because they see that as stability, right? So think about what happened to Palantir.
Yeah.
Right?
Oh my God. The trading at 75 price to sales. I mean, there's that famous letter from the .com bust where one of the tech companies is like, hey, you guys are buying my company at 10 times price to sales. Do you realize how ridiculous that is? And then there's Palantir trading at 75 times price to sales. It's just absurd. I can't even get my mind around it.
Not to say this is going to re-rate, to that extent, but it definitely has the potential to be a major beneficiary of, the political regime change.
And then the only risk is, this former government entity is filled with, people that are somewhat more bureaucrat-minded. Are they going to be able to innovate and move fast enough? Are they going to be able to protect their market? Especially when you have all these Silicon Valley guys that want to move fast and break things. And there are, ASP Isotopes is creating an American subsidiary just for the purpose of being able to potentially address that market. And I haven't looked into Silex, but Silex is a similar technology to ASP Isotopes. But they're...
ASPI is a few years away from production, though.
It's kind of hotly debated how close they are to production. Because ASPI Isotopes, they have a facility that's producing, but they're producing, I think, silicon-28, which is used in semiconductor fabrication and potentially quantum computing. So they have a producing facility that could produce enriched uranium. It's just currently producing something else. So they're building more capacity, but it's not like they're producing nothing. They're producing something, but they're definitely light on capacity. But Centrus is somewhat light on capacity too. What Centrus has is a huge building with massively reinforced concrete floors to install centrifuges. And they have a few centrifuges installed, but they need to fill out the rest of this building with a lot more centrifuges. So they kind of have capacity in one way, but they still actually need to finish building out their capacity, which is what the Department of Energy contracts is meant for, is to give them the money to finish building out that capacity. So there's nobody that has real capacity at this exact moment, but I think some are closer.
Yeah. So I would rank this one with Portillo's as that not quite strong buy, because I think it might retrace a little bit. But yeah, long term, I think this is just a great company to own.
So this is, we'll put that in our light green. That it's you wouldn't be against buying any on Monday, but it's easily could give some back in the next week.
Right. And considering these ratings, it's so short term minded, because in the long term, doesn't matter if you buy it, Portillo's at 13 or 12.50, not so much, right? Yeah. It's about trying to get the best price you can, but long term, the consideration of fundamentals is far more important than your technical entry.
Yeah, but I have been burned by being technical agnostic. I think it is not healthy to be technical agnostic. None of these charts are like screaming red flags, so they're all potential buys. But I have been burned by ignoring technicals.
Yeah, I think they need to be used in conjunction, fundamentals to figure out that it's a good company and worth buying, and then technicals for entering and exiting. But technicals can just be very, short term.
Yeah. Well, this is one of my super secret paywalled stocks. So I won't talk about what they do. But I really want to own more before their next earnings call at the end of February. And what do you think of their chart for Monument Mining?
This looks great to me. So you have this strong run up since October, right, where it looks like it has doubled since, right, and then it traded at the top of its Bollinger Band for a little while. It fell, and it's just been really well behaved, bouncing on either the bottom of its Bollinger Band or the 50-day for a while, and then it broke out, and now it's starting to consolidate again, and it was just overbought, and now it's cooling down, right? This looks like a continuation of a rally to me, especially because of how it's, staying above its 50-day. And obviously you got the golden cross back over there in October. So yeah, this looks like a really good chart to me. I would put this near the top of my list.
Yeah, so the long-term trend is intact, and then even just for the next few days, the chance that it's going to bounce off of this 20-day moving average, because it's pretty much, if we zoom in closer, it's kind of already doing that, right? So we have a hammer candle where, and the hammer candle is one of my favorite daily candles, where it starts out and there's selling all throughout the morning. It hits the low point, and then in the afternoon it just buys all the way back up to the top. So it's a sign that the sellers have lost control. The sellers have lost momentum. So you have a hammer candle resting on a 20-day moving average on an uptrend. So not only
is something I would definitely be comfortable buying at open Monday.
Yeah. Okay, so I'm gonna, because this was my top pick anyway, I'm gonna move that to and because I want to buy more before their next earnings. And I'm not a quarterly earnings gambler. Buying before earnings is typically a gambling.
The binary option.
Yeah, and I have Degen in the name because I like risk, but I don't actually gamble. But and if you read my paywalled write-up, there's something very fundamental happening in the company this quarter that they could have done a much better job broadcasting, and I really had to dig through a lot of the weeds. And I had one of my subscribers kind of turn me onto the company in the first place. He did a lot of research on it as well. But
in this case, it might be for the best, because it could have turned into a sell the news situation.
Yeah. All right. So that's probably going to be my number one pick on Monday. And then on top of that, I have Idaho Strategic Resources. This is one where I have this nagging in the back of my mind that I don't own enough gold miners. What do you think of that?
This is an interesting chart for sure. it does look like we have we've got some lower highs and lower lows so far. It's breaking out of this recent consolidation range, and it's above its moving averages, but the moving averages did just make a death cross, right? But and obviously that could change if it stays above the moving averages for long enough. But this is giving me a lot of, concern about it retracing downwards, right? Especially how it, after passing over the moving averages, it keeps on kind of retracing back. That looks like it might end up failing on this rally. And if it doesn't continue to move higher to a point where the moving averages converge again, I would be concerned that this is going to be a lower high, and that trend will continue.
Yeah, and this is another one where the fundamental price isn't so dirt cheap that I feel like I'm just getting away with something, and I am completely happy catching the falling knife. If this one fell, I would feel that pain decently. But so it's right on the top of its Bollinger Band. And then the death cross is where the 50-day fell below the 200-day. Now the moving averages are really close together. So this is a concerning chart.
Yeah, I mean, it could be a rally, but I have less confidence in this than some of the other potential breakout charts. I think it more so, that line you drew right there could be the top.
Yeah.
Right. It could, very easily fall down and even break through the $10 level, which would, make it not the most optimal time. There's a lot of risk in this entry.
So this is an unconfirmed rally until it's broken above the previous consolidation ranges.
Yeah. But there is some really strong support at, it looks like, about 10.5. If you draw that line all the way out, you could see all the times it's passed through that. Yeah. So if it falls, maybe that's the bottom again. Maybe it doesn't fall through. But I would need to see either further breakout or some consolidation at this range, just to confirm that this isn't going to be a falling knife. Because if it does fall through that 10.5 level, it could be a sign of trouble.
Yeah. So the good news is there's some resistance to the downside that it probably won't fall that far if it falls. But if it does break through that, then it really keeps going with no resistance to stop it.
I mean, yeah, there's some other resistance around like 9, but
that's from.
Yeah, this one isn't screaming a buy to me the way some of the others are.
Okay. So
I'd put this one maybe as yellow, something to keep on the watch list, but not that I'm buying at Monday open.
Okay, fair enough. And then Burford Capital. I just have this. Argentina came out recently, and they want to tap the debt markets. Argentina wants to issue bonds, and they're now this is me inferring now, but I think their credit rating, the interest rate that they could raise money at, would be better if their lawsuits from when they nationalized industries in the previous administrations were settled. So Burford Capital's Burford Capital is a company that does litigation finance, and I think the stock price has been stuck in limbo because the market is unsure what to make of a lawsuit against a sovereign nation, because the courts don't want to compel payment. The courts don't. There's this jurisdiction issue, right? Can a federal appeals court in New York compel the sovereign nation of Argentina to pay? And the judges don't even really want to touch it. But Argentinian politicians want this black stain off of their reputation, but it's expensive. So Burford Capital wants to bring Argentina to the negotiating table. They just keep on maneuvering everything to make it just more and more annoying for Argentina to not have settled this matter. And the market really doesn't know how to value this, because it's been several quarters now of the price being stuck between 14 and 12 in this channel. And the company just keeps on improving under the surface. It just keeps getting better and better, but the stock price doesn't respond to improving fundamentals because of the overhang of this Argentina litigation. And I feel like this is going to get resolved, and this is just more of a gut feeling. I feel like it's going to get resolved this year, and I was thinking late summer for when the final appeals process is over. But with Argentina publicly stated that they want to tap the debt markets, I feel like they would want to resolve this.
Yeah, I agree with you, and especially what you said about it trading in this range. So if you want to go ahead and annotate this real quick, drawing in the top there at 14 and a quarter,
Yeah.
and then the bottom at 12 and a quarter. Yeah, right there.
Yeah.
Conventionally, I would tell you, this is range bound, and it looks to be at the top of its range. And if you look at what's happened each other time it's been at the top of the range, it's fallen, right? And it's kind of gone back to the bottom. But there's nothing like a fundamental catalyst to break something out of its range, right? And you've got it above its moving averages. The RSI has come up quite a bit, but I'd be concerned about it pulling back and staying range bound until there's some sort of certainty about the Argentina suit. But this does look like it's it could potentially move upwards out of here. It just needs to break out of this channel.
Yeah. Well, my original, I think I wrote about this toward the end of last year, as far as my big ideas for the year, is I wanted to accumulate this one slowly heading toward the summer. And that still might be what happens. I mean, this could stay in the channel for a long time. It could stay in the channel for 2 more years. And there are other things going on with the company, but I believe it's the Argentina lawsuit that's just so large that, so the litigation finance company owns about 40% of the eventual payout from the claim. And the original loss plus interest, I think, is something like $9 billion. And they've marked to market the value on their books for all these lawsuits as if they sold this half-finished lawsuit, what could they sell it for? And on their books, it's held at $1.5 billion. But I think what they'll eventually get, they want to bring Argentina to the table to negotiate, so they're not going to get the full $9 billion. But that number keeps growing at 7% a year. So this is like a 12-year-old lawsuit. My guess is, they're probably going to get Argentina for, 4 or 5, 6 billion, and Burford Capital gets to keep 40% of that. And that's when that happens for a 3 billion market cap company. That is a massive slug of cash.
That would be a huge inflow.
And the management team, so the 2 of the top C-suite executives that founded the company have a large equity ownership stake. They've done share buybacks in the past. They're not doing share buybacks right now because they, during COVID, the courts didn't process a lot of cases. So they're still sending money out and haven't had a lot of money in recently, so they raised some debt. So they stopped their share buyback program while they were raising debt. They didn't want to do a debt-fueled share buyback program. But when they get a massive slug of cash in, they're going to take a lot of that money, put it in a share buyback program, and then the multiples can just go absolutely absurd. If you look at where this company traded at before they did their New York dual listing, and you look at the London exchange, this thing used to trade at some ridiculous multiples. And I think with the overhang off them, and I don't know if this happens in 2025. I just really strongly suspect it happens in 2025.
Yeah. So, not to move off of this, but I don't have too much time, so I think we should do some rapid fire analysis.
So where would you put Burford Capital compared to the rest? Yellow?
At this point, right now, this is my least favorite idea that we've had.
Let's go. So the short term, you think it'll fall back down into the 12 range from this channel.
Yeah,
most likely.
Right. Barring, a outcome of that case, I think it's more likely that it reverts back to the bottom of the channel.
Yeah. Fair enough. Okay, so more rapid fire. Titan International. who just secured a major contract to supply John Deere.
Yeah, so that's some big news, but last time that it tested the 200, it immediately rejected pretty much into a huge down day.
Okay.
And, again, it's getting hot on its RSI. I think there's a pretty decent chance that it pulls back. And if it does pull back, that will be creating a lower high, which would suggest a downward continuation.
Okay, so not a hot chart. How about Beazer Homes? I got out of the home builders a while back, but I think the time might be decent for re-entry.
Yeah, so this chart broke down pretty significantly at the 36 level, right? As a lot of home builders did. And, it did maintain its bottom at 26.5, it looks like. So that's pretty good about, downside risk, not too much of that. And I think fundamentally the housing market should, I don't know if it'll improve in the first half of 2025, but at some point there will be a rebound in real estate. This isn't something I feel like I, need to rush to buy, but it's looking like the bottom might be in.
Okay. Let's see. Well, let's leave off talking about some of the ones we want to talk about to do just a couple more rapid fire. Brazil bounced hard with the falling dollar. So PagSeguro, I don't think PagSeguro bounced as much as some of the other Brazilian companies.
Yeah, this looks like no man's land to me.
No man's land. Okay, let's look at El CRESY.
Wow, the difference in those charts is.
This is the Argentinian one, but all the international had a huge bounce with the falling dollar.
Yeah, this chart looks better to me. It bounced off its 50-day recently, creating a little bit of a channel here, some consolidation, which is usually what you'd like to see. So yeah, this could definitely, especially if international is strong and that continues, this could be a good buying point.
Okay. And then I haven't written about this one yet, but I think it's on my short list to write about. This is the Monopoly Bank in Colombia.
Ooh. Wow, look at that in the last few days.
Yeah.
So, yeah, I mean, that kind of just blew the roof off. It's getting really hot on its RSI, but it broke through a major double top. So sometimes things that are oversold get more, overbought get more overbought. And this looks like it's breaking out pretty hard.
Yeah, this one I haven't done a write-up on, but it's on my short list. And
just real quick before you get off of this one is look at those higher lows that it had leading up to this.
Okay.
And that's pretty significant. And all of them were bouncing, just a little bit below the 200. This looks like a really strong uptrend.
So there's your double top. There's a sustained resistance line, and there's higher lows.
It just absolutely ran through that. So volatility to be expected for sure. Will it keep going higher? Will it pull back? I'm not sure, because some of these rallies, as we've seen with the semiconductors and AI names and quantum computing names, sometimes the overbought stuff gets more overbought.
Yeah, and back to your point about the size of the move. I mean, in Centrus Energy, it went from like $40 to $120. This went from 32 to 35. So this channel was so tight for so long that it's moving between a very tight range, but it did break out of this channel now.
Yeah, and looking at the MACD, there's no, that histogram is increasing. So this rally might not be over for this one, but it also, entering at 35 or whatever it's at now might also not be the best time.
Yeah, but I think odds might be good that overbought becomes overboughter.
Yeah.
Okay, and then
definitely a chance for that.
All right. Well, you have
we can
to
run
go.
through a few more.
You can do a few more of this rapid fire.
Yeah, I could do a few more rapid
consumer
fire.
Discretionary. I want to buy some consumer discretionary. I'm really light on it. Kohl's is
no man's land.
Okay. Let's check out Sportsman's Warehouse.
Yeah, that's also kind of looking like no man's land to me.
Okay. Malibu Boats.
That one looks like it created a pretty solid bottom at 33. If it can hold here at the 200, move above the 50 as well, this could be a serious breakout.
Okay, so that one has some glimmer of hope.
Yeah, that one could have some torque.
Leslie's, still no man's land.
No man's land.
Okay. And Solo Brands, also the same. So the only one of these with any glimmer of hope is Malibu Boats.
Yeah.
And
did you want to look at some of the other gold names like Equinox?
Yeah, we can put Equinox in there. Yeah, this one.
I mean, that's super range bound, but it's holding above its moving averages. It doesn't really look like a breakout of any sorts, but just looks like volatility to me.
Yeah, and I might want to go out looking for more gold names to buy, because I think right now the portfolio, I'm light on consumer discretionary, I'm light on gold, way over heavy on energy. I think there's a decent odds that energy could have a good year, but
yeah. Do you want to take a look at some more of the tech names?
Yeah, we can do that. So tech names, well, some of these are tied up with the medical, but there's LifeMD.
Yeah, that's lower highs and lower lows, not looking too hot.
Okay, LifeMD, Zip Recruiter.
Yeah, no, that's no man's land.
Okay, NRDY.
That looks really interesting, actually. Huge rally off that bottom, and it's creating a nice base, maintaining above the moving averages. This could be a buy for sure.
And the 50 is getting really, once the 50 crosses the 200, makes that golden cross, then it shows up on everybody's screens.
Right, and the other thing is look at the MACD. That's about to have a bullish convergence.
Okay, so bullish convergence to the MACD, consolidation,
I would actually
bull
throw
flag.
This one towards the top of the list. This one looks really good.
Okay, so that's good. Maybe rapid fire is the way to do it. Let's see. How is Doug looking?
So it is building a base above its last low, so that's at least a good sign. And the fact that it's holding above the 200, but it's not looking like a breakout really. It's looking more like consolidation, if anything.
Okay, fair enough. And then check out Quad U Energy Fuels. Is this is that the same chart? Did it not update?
No, that's correct.
Okay.
Yeah, this one it might be some more consolidation. This has been super range bound.
Let's see.
Like this compared to Centrus is night and day.
Yeah. You got time for a couple industrials?
Yeah.
So there's Custom Truck One Source.
That's interesting. So yeah, it's rallying up above the 50-day. Not too hot yet. Pulled back. I think there's definitely potential that it goes back, down to back to the 450 range, but it also could be an inflection point, being above the moving averages. You have the golden cross. Yeah. Yep, I'm ready for the next one now.
Okay. ALTG, Alta Equipment Group.
Yeah, I mean, it's sitting at the 50-day. I would want to see it hold, maybe, get above. It wasn't able to break above the 200, wasn't even able to touch the 200 on its last rally. So that's a little concerning, but the moving averages are narrowing. So that might mean that a big move is in store.
Okay, and then Forum Energy Technologies.
That's had a pretty significant run, and it went overbought, and it's pulling back. But if it can sustain above, the moving averages, you could definitely see a golden cross potentially form. I wouldn't be buying this one this minute, but definitely want to keep on the watch list.
It could consolidate a little bit.
Yeah.
And then let's do matter companies. Oof.
Yeah,
that even looks ugly to me. Although part of me does say that this quadruple bottom or quintuple
it could
bottom.
definitely be at a bottom, but bottoms can always fall out, and it doesn't look to be showing any signs of rallying. And since August, it's had lower highs and lows. This looks pretty bearish to me.
So this, lower high trend is not good, but mixed signal
the base
economy
is pretty strong. So buying here might not be too much downside, but not too much short-term upside potential, doesn't look like.
Okay, well, nerdy it is then. All right, well, Mitch, thank you very much for coming. I really appreciate it. Again, this is
thanks for having me. It's always great to have these analysis sessions.
Yep, and this is not financial advice. And thank you very much again. So have a good one.
You too. Bye.